Samir, a quick last question. I was looking at a post that your team had shared about the flexi cap fund, and ultimately I think a lot of mutual fund investors are wondering whether to keep the SIP on, and they saw that earlier in the year when the broader markets corrected by 20% and then came back by 20%. Everybody that jumped ship when it fell 20% then regretted it. So is that the trick for long-term compounding?
100%, because if you see, if although we don't like our fund to be so volatile like it was in Jan, but it helped the SIP investors. And at the end of the day, now we have beaten the index by more than 10% in 19 months or whatever. So generally, that is the formula. I have personally made so much money just by investing. Although I have literally not done SIP, but broadly it's been equivalent of a SIP. Because the market is good, and we also have to keep looking at alternative, that there is no alternative, in the sense that although today the nominal growth rate of India and of earnings will be say 10% for now, for at least 2-3 quarters. Now people will say that previously our market used to give 14-15% because that was the earnings growth and that was plus minus the GDP growth in nominal terms. But it has to be compared with interest rates. Previously, you were getting 10-year government bond at 9%, so you will make 5%, 4% more than that at an index level, 13-14%. Now that is giving 6 point something, so you are not supposed to make 15. They are all coming from the same backdrop. But the point is, there's nothing better, and I am exhibit A for that if you want to see.
All right, exhibit A. That's a good way of putting it. Thank you so much, Samir,
Thank you very
for
much.
speaking with us.